I worked for a family whose name was on the business school I studied at. They had their name in a lot of pockets around Southeast Asia, not just in Singapore. Actually up in Hong Kong as well, they had quite a few operations. So it is luxury if you work for the right family office. So there are some that I've heard of that, have private jets. They fly their investment team around Southeast Asia looking at private hospitals, things like that. So that element is something you don't get access to at working a corporate job usually. So if the one you work for shares that wealth, say you work for Zuru, billionaires, they have yachts, they have the .com manor, maybe you get access to some of those things. So that would be the luxury side. Mine was a Southeast Asian billionaire, so a little bit tighter. So no, we didn't see any luxuries.
Hello and welcome to another episode of Ways to Wealth. Today I am joined by Brent. Brent, why don't you give us the TLDR on who you are and how you got here?
Yeah, thanks for having me. So my name is Brent and I run a YouTube channel here in New Zealand educating Kiwis on how to have better financial habits around how to save for a house, how to invest, how to save more money, that kind of thing. So that's a bit about what I do and I'm excited to see where we go today.
Yeah, cool. So you've kind of taken an interesting path of building this YouTube channel that's clearly a big passion of yours, and you're putting a lot of time and effort into curating that different content over time, and then you're doing that while also having a primary income that's probably enabling to a certain degree some of the learnings that has got you to a point where you could create a channel that actually has strong engagement and great content, but also keeps the lights on at home, I imagine, to kind of make life kind of keep flowing.
Yep.
Yeah, nice. And how long has the YouTube channel been running?
About 3.5 years now. Yeah, so it's been a little while. I started in February 2022.
Oh, yeah.
I started as a bit of a project. Is this something that I can do? I work in finance, have done for some time, did my degree in it back in the day.
Yep.
So it was a natural fit. And of course, being a numbers guy and finance literate, it was a good topic to get into and something that hadn't been explored so much in New Zealand in the YouTube space.
Right.
Yeah.
And so that was just after the kind of that was when the 2021 bubble was evaporating.
Yep.
I remember writing in 2021, September, a memo about inflation propping up and kind of the consequences of that. And then obviously how asset prices and market participants reacted.
Yeah.
So you got to kind of create content through that.
I did, yeah. I actually bought my house in 2022 as well.
Oh, cool.
It was around April, I think, is when I sort of signed the dotted line.
Right.
And at that point, there was talks about interest rates going up, inflation, coming, all that post-COVID kind of boom. So that was really when I decided to get in, not because of the timing or anything, but just sort of seemed a lot of people were getting into that space. And I thought that's something that I could definitely see myself doing.
In terms of the YouTube?
In terms of YouTube, yeah.
Yeah, right.
But also how
Also, a load of people were buying houses then.
Yep.
Okay, cool. And then you got to kind of take that, but that wasn't a big part of your journey in terms of house ownership. Or do you think it was because you were going through that experience at the time? It was a good source of content for you, or?
Well, something I was sort of looking at the year prior. I mean, you had a lot of rush through 2020, 2021. It's something I was lightly dabbling in.
Yeah.
And constantly getting sort of pushed back by banks and things, but had a broker on my side, which really helped.
Right.
But yeah, the timing didn't have anything to do with YouTube, really. It was just something I was going to do.
Have you made much content about you purchasing your home, though?
I have, yes. Things like some of the costs that went up as well. So after a year of home ownership, how much had rates, electricity, all that kind of thing gone up, which was quite eye-opening.
Yeah, that's cool.
Yeah.
Oh, that's right. Wicked. What gave you the confidence to start it? Was it grounded in your training and the long career that you'd had, and obviously a lot of it being overseas?
Personal challenge, I think. You sort of finish work at 5 and think, what else? You can watch TV, play Xbox, but I thought of something more productive would be pretty good.
Yeah, cool.
Yeah, and something that's a bit of a challenge as well. It's not something that comes naturally to me, being on camera or
anything like that. So pushing the boundaries of your personal development from a comfort zone perspective.
Yeah.
And mixing that with your passion and your kind of what you've been trained in, which was more the financial side and kind of crunching the numbers and looking at the numbers.
Correct, yeah.
And you've had a few years of kind of just an abundance of data that you could choose to look at and make content about.
Yeah, exactly, yeah.
What is your current we were actually having a little discussion about this. But what's your kind of current feeling around some of the different statistics and data that's being kind of collected these days, and how, is it still relevant, and the means in which they're doing these different surveys appropriate? Like, is the data real? Does it seem real? Like, if we look at inflation, for example, and you then look at your grocery bill, is like, it's not going to match the headline versus the increase has been in that area. Even stuff like, of course, your Google subscription. I don't know how many times I remember receiving emails recently about Google Suite price going up for our business all the time. Feels like all the time. So what's your kind of stance on like the current way that these surveys are broadly being done, and why haven't we got, or does it make sense for us to have almost real-time data?
Yeah, I mean, the more data you have and the more accurate and timely it is, the better, of course. And I think the Reserve Bank's done some work in that space around the CPI.
Yeah.
Is it the census they're looking at winding back and increasing the frequency of CPI? Yeah, I mean, things like that are very important because nothing with what the RBNZ decisions line up with when a lot of these surveys.
That's a quarterly piece. It's a bit weird, whereas in the US you get the monthly inflation data, which is helpful.
Yeah.
But I was also talking to someone at a conference last week, and I was saying, the data's bogus, because there's no incentive for people to really give these surveys either, especially in the US. I'm talking about kind of payroll numbers and different job numbers where it's surveyed. But we obviously need strong data in order to kind of make policy decisions. What about some sort of incentive for businesses to basically report these numbers fast?
Yep.
Even on something like a tax credit, because the money that you can save in Insight would probably pay for it, and that encourages people to actually provide the data rather than having these massive 800,000 revisions and rewriting history. So
in New Zealand, I think they've revised the CPI retrospectively a few times, and Adrian Orr cited that a few times, that the data they rely on isn't accurate, and that's why you saw a 200 head count back in 2017 become 600, and now there's new announcements that they want to wind back again. So timely data is very important because those CPI announcements and things like that, household income surveys and things, lead to the decisions that the Reserve Bank makes around interest rates and things like that. So
it's interesting though, I've heard that internally they have more real-time information, but they still rely on the official data.
Not too sure of the detail around that one, but I'm sure they have their own in-house.
Yeah, I've heard like they've got some pretty good stuff, and it's more kind of probably in real time, more close.
They didn't, I'd be surprised. Of course, they've got weird indicators, and if it's only quarterly data and they're making announcements every 6 weeks, I think it is, there's a lot of risk in that they make the wrong call.
And even with great information, you're not guaranteed the right call, right? So just a complex situation. I think that I think as general populace, we get we can get comfortable in repeating things that other people have said, and think that it's just about lowering interest rates, or it's just about increasing interest rates, or whatever. It's so much more than that. But there's that one blunt tool that everyone knows about. It's like, this is how we deal with changing rates of inflation. But
it hasn't done a lot. That one blunt tool
hasn't done much at all.
The old housing market didn't blow up like people were saying. It hasn't really responded.
So it's because the New Zealand housing market or the global?
New Zealand, yeah. So traditionally, that's the...
Well, in terms of these cuts recently.
Yeah.
Oh, well, that makes total sense.
Yep.
What makes total sense?
Yep.
Right. True. I was saying, it's been pretty bad though.
Yep.
So it hasn't responded the other way.
Correct, yeah. Usually when you drop rates, Russell in 2020, went to 0.25 on the OCR, people went crazy, buying up assets, everything was going crazy. We haven't quite seen that on this most recent, sort of downwards trajectory, and expected to go lower as well on the OCR side.
Yeah.
So housing has been stagnant, it's quite an interesting one.
Yeah, well, I have a whole a pretty strong view on kind of like cutting, basically.
Yeah.
And should we be? Domestically, maybe it would create a lot of reprieve, but I think there's an international strategic picture around our currency and around our susceptibility ultimately to maintain buying power that I think means the RBNZ has a huge role to play, and they have to be really considered, not just about that kind of thing that Naval says around like easy choice, hard life, hard choice, easy life.
Yeah,
I think we're in that a phase of that where you have to make pretty hard choices, but it's going to be for the best. And yeah, like it's actually quite a hard like position to actually have to make these large kind of impactful calls with incomplete information that's always changing and, like you said, staggered quarterly. But like how do you think it could be improved from your perspective, kind of being a data guy? Like what are some of the low hanging fruit that maybe could be taken?
Not something I'm fully across, but essentially having better data that's more accurate, more reliable, more timely as well, is never a bad thing. Even in the bank, we do look at data, high frequency, low frequency. If it's high frequency, you can make decisions quicker and that kind of thing, but never compromising on the reliability point.
Yeah. Have you heard of Truflation?
No, I haven't. No.
It's like this it's this interesting tool where they have like a real-time inflation measure.
Okay.
It's quite an interesting, you would be interested by it.
Oh, definitely.
You should check it out, Truflation. I think it was actually a decentralized project. So I think it was like...
Is that in New Zealand, is it?
No, it's global, but they have Truflation for different regions.
Yep.
So they have like a true inflation rate for each country. Quite interesting.
I'd be interested in what the data feeds are that they're...
Yeah, for sure. I think it's quasi open source, or there's openness around the data, I think.
Yeah.
So you can get a good sense of what's going on.
So a bit more than the CPI.
Oh, wait. Well, yeah. And there's been really interesting relationships between like the real-time Truflation number and then CPI and the current OCR rate, or the overnight rate in the Fed funds rate in the US. So it's been quite cool. Mainly, obviously, the US. It's a US-centric read.
Yeah.
But I believe they have like a global, like they have different territories. So it's quite cool. Again, like I think the positioning of it though is like, unbiased, decentralized data feeds that are giving you a true number rather than obviously a potentially politicized number that's kind of there to keep everyone calm.
Yep.
And also maybe relying on data that's not all coming in at the same time.
Yeah.
So it's quite a cool feature. But I like the idea of the idea that you could basically collaborate across a group of people. This is, I guess, where the idea of blockchain or Web3 kind of becomes quite interesting as a concept. Now, obviously, an application, I think it's a whole different story.
It's people with the passion without the bias or the sort of undertones that they need to convey, right?
Well, yeah, theoretical non-bias, right? So there's probably bias there. But yeah, like the idea that you can have multiple data streams coming into one number and essentially like an open sourced kind of like Manhattan Project-esque platform for inflation data, or any sort of kind of data where you rely on wanting kind of true information, not wrong information. So I think that that's quite a cool tool people can utilize.
I'm definitely
that you should take a
look after.
Yeah, I think it's quite expensive, the subscription.
Okay.
But I think what was funny is that I saw that I don't have the actual data on it, but it seems like it was a Web3 type project. So I wonder how they funded it.
Yeah.
And who owns it. And, because that's something that we're thinking a lot more at the moment, is the application of blockchain.
Yeah.
Just because we want to have our heads in the game around it. And we've got some ideas of how we would want to implement some solutions or some tech.
Yeah.
None of which at the moment are going towards like stable coins or anything like that. I'm really interested in stable coins. At the moment, I don't I haven't found any interesting use case that would get our team excited about it, because you can't pay interest at the moment. You're kind of restricted in that regard. And what else are you just then holding a bunch of money in a bank account and running a blockchain ledger on top of it? Like,
Yeah.
Once there's some applications that I feel like could be fun and interesting to explore and could be good for end consumers, like we're looking the stablecoin space, but we're looking at other things around like succession planning and asset transfer. And I think the problems are becoming much more obvious as time goes on and people have more investment accounts and more decentralized investment bases. Like what happens if you invested in a bunch of Bitcoin on a cold storage, but you didn't tell anyone.
Yeah.
And you come to that point in the future and that asset gets lost.
Be lots of that going on.
Well, we've got lots of clients that are talking to us about that fear.
Okay.
And how to handle it.
Yeah.
And we're working on solutions on,
Rather than having 16 codes written down on a piece of paper in the sock drawer or something.
Well, yeah, that for sure doesn't work, right? In the event of a fire.
Exactly.
Yeah, at the moment, what would you do? You'd probably set up a Google Drive and a folder and you'd do it that way. And that still works. Literally.
Apple Notes or something.
Yeah. But someone's going to find it.
Yeah.
So yeah, and I've even talked to crypto guys that are like, they're working out themselves how to try and do it. So like, okay, I'm gonna have one set of the keys here in my house, and my immediate family knows that is, but then I'm gonna distribute the other keys throughout a bunch of people.
Yep.
So that if
it reminds me of Harry Potter, isn't it? Like the portkey concept where he has it balls and
yeah, right.
Yeah, a bit like that. Because I guess if you're a company that manages that sort of password protection or something, nobody's ever going to trust, right?
No.
That's the tricky part.
Well, yeah, you can't.
They get hacked, then you lose your data, you lose everything they're trying to protect in the first place. Yeah, no, maybe that passwords in the sock drawer is the best option.
So one of our original members of the team, we were working on just, again, exploration on how we would do maybe a mining project. Like if we were to ever buy our own hardware and like either stake or basically mine. And the guy that was working on it, he came up, I was reading it the other day, and he came up with a pretty good solution for how we were going to protect all of our keys and how the keys were going to be made into a certain object that wasn't paper. And then how are we going to actually get it engraved, and how we're going to have to use different engravers, so that it gets really kind of down a rabbit hole, right? Of like, this seems really hard, right? Like this should be
that engraving on a trophy type.
Yeah.
Yeah.
And then obviously having the seed phrase over multiple like dog tags, I guess.
Like diversification in a portfolio. I mean, how many tech stocks did you want? How many, like, do you have to change country? Have an engraver in New Zealand, an engraver in Australia, one in Singapore, wherever it might be. And what if how diversified did you want to be in your engravers? Where's the trust level for? Yep.
Seems obscene.
Yep.
It seems like a bit of a distraction, I think, from like kind of good conversations you have, but it makes sense. And like you say, is like, well, if the general trust is eroded, then no one can provide that service because none of the consumers that are going to want to use the service are going to trust that you're going to do it right.
Yeah.
Which kind of then makes you scratch your head and go, like you say, maybe there's no way that you could actually build a product in that space because the people that want to use it are not going to adopt it.
Yeah.
Because because they're having to trust someone. And I guess a lot of the kind of principles behind blockchain is that you don't have to trust anyone.
Yeah.
Which is a pretty flawed place to start, isn't it?
Yeah.
Because I think there's, like, when you invest in a company for the long term and you buy it and you treat it like you're an owner, not a stock picker or something, you're owning that business. You're trusting that the executive team are basically going to go and execute for you.
Yeah.
Like, we think about the difference between running your own business and picking a company to invest in. Like, you're delegating the accountability and execution risk to those people to go and do. Like you would in this case, trust with one or an institution that then delegates responsibility to maybe a few different distributor organizations to then take care of that for you.
Yeah.
And your alternative is doing it yourself, which creates so much risk.
It does, yeah. I have a Ledger Nano at home, but never quite got into it. It was always easier to buy an ETF or, through an intermediary. It was always easier.
Yeah, I think it's a mixed approach, right? Like, I think you'd probably want some portion in cold storage, right? And at least access to quickly getting things to cold storage.
Yeah. If I had decent money in crypto, I'd probably have it in, cold storage, of course, from a security point of view. But any exposure I have is through ETFs or
and then it's insured.
Yeah.
Right. That's the benefit. I think the real benefit of using ETFs at the moment is you've got the insurance protection that you're getting from your equities and your ETFs.
Yeah. And the reputation of the company that runs the ETF.
Correct. Yeah. So that you're getting that benefit. I think that's a benefit worth thinking about.
Yeah.
And then I think if you're looking at cold storage versus like institution, like I think it's a mix. I think like I don't feel overly comfortable keeping all of my crypto conceptually on cold storage in its totality.
Yeah.
Because I think I'm a risk as well. And then obviously probably not all with institutions as well until it's insured.
Yeah.
Until your underlying Bitcoin, which I think that for our underlying Bitcoin, it won't be long until that gets insured.
Yeah.
Like the equities and ETFs on our platform. And the cash. But right now it's not. That's like, okay, easy option is the ETF. I don't like the ETF though because it's not tradable in all hours. But I guess if you're dollar cost averaging and you don't care, if it's a DCA strategy, right?
Yep. And you'll have two groups in crypto, like very two distinct groups. You'll have your traders because it's the most volatile 24/7 market. But then you also have your buy and hold people as well. Diamond hands through that dip in Bitcoin, and now we're back up to all-time highs. So
what is your general take then as a traditional finance guy that's been watching Bitcoin for a long time, I imagine?
Yep.
Especially with your stints overseas, you'd have been more exposed to it.
Yeah, in Singapore, you used to be able to go to the bar and spend Bitcoin. We're talking 2017, 2018.
There we go.
You had your crypto ATMs as well over there.
Yeah.
Not that I ever used them, but they were always there as well.
So what is your personal thesis on it?
I don't do a whole lot in crypto, to be honest. I'm quite a boring investor. I'm ETFs, index funds.
The Bogle way.
Yep, just buy and hold. I've got enough stresses in life than sort of watching stocks go up and down on a daily basis. So I'm probably the most boring investor you could find. S&P 500, NZX 50. A bunch of thematic ETFs or funds, and that's about me. There's a bit of satellites, there's a little bit of a play here, play there, couple crypto ETFs, whatever it might be.
Right.
But nothing too exotic. So yeah, pretty boring.
But like in terms of like the thesis behind Bitcoin, I mean more that, not like your personal position on trading or crypto, but like obviously there's been all of a sudden quite a shift from an institutional perspective of more large asset allocators feeling like they almost have to allocate to Bitcoin. And then obviously you've got what's going on in the stablecoin. I think the two things that are most interesting in the space are Bitcoin adoption by institutions and then the disruption of stablecoins and almost the US government hijacking that industry.
Yep.
Those would be my two pieces, right? Where I think there's the most interest. Beyond that, I think it's pretty much all speculation until you can find real use cases.
Yep. Yeah, I guess with Bitcoin, it's such a large asset now. I think the market cap's greater than gold, that it's really impossible for.
I don't think you should buy it than gold, is it?
Is it?
Maybe not. Yeah, it's 1/10, I think, of gold.
Okay. Yeah. So something like, well, neither are charred, and I remember seeing it.
Yeah.
I can't remember what it was.
Well, it was
Anyway, it's billions.
Yeah, it's billions. It's definitely bigger than Apple, I think.
And where there's money, there's often a bank. That's usually how it goes. If there's money in something, they'll eventually come. It also speaks to it's becoming more legitimate as an investment. I think people historically have seen it as speculative. It's BS, it's this and that. But with these institutions moving in, I think it is reaching that more formalized state. It still isn't a perfect means of exchange, but those institutions moving in does show that it's moving away from this anti-government, anti-establishment place into this AML regulated space where institutions are happy to get in. In terms of my thoughts, I think it's actually good for Bitcoin holders, maybe not those that have undeclared holdings.
Right.
But for those who want to see the price appreciate, I can't see it being a bad thing.
Yeah.
You have pension funds, sovereign wealth funds, you have family offices, individuals moving into crypto because it's moving into that more formalized space.
Yeah.
I only see that being a positive for the price.
Yeah. I think that it is probably the price that has driven the adoption, but more than anything else.
I'm sure.
So here's as it often is with markets, right? The use cases are clear around the idea that you could very easily transfer your entire wealth across the world with you in
and I heard stories about, in Southeast Asia, people might be working as domestic helpers or whatever it might be, just people working outside of their home country, expatriating funds back to their country has high transaction fees. And crypto is a way of, I guess, historically, I'm talking back in my Singapore days, it's a way of doing so without, a lot of control, the banks and their fees, governments and maybe, currency flow restrictions, which were a thing during COVID as well, that you can move money without a lot of tension, a lot of friction. So that's definitely a use case that I heard of when I was back there.
Yeah, and just safeguarding. It's a lot easier to carry 100 Bitcoin than 100 ounces of gold.
Yeah.
So that's been interesting. And I've always kind of seen this dichotomy of like decentralized finance, East and West, and kind of economies becoming more fractured.
Yeah.
And then their on-ramp, off-ramps are becoming more important. I would observe, though, that it seems to me like every experience I've observed in crypto has been that the transaction fees are actually really, really high.
Okay.
Like, not broadly, because I think you're right. I think like Western Union versus online. But when I look at some of the transaction flows of, our competitors and even, our cost, we can't drop it any lower to transact. And we would like to, for example, for our members, we'd like to lower the cost, but we can't right now, but we'd like to. So it's definitely not got down to as cost effective as the arrangements we can get to help people transact in equities, for example, which is much more cost effective. So I'd say that it will be really interesting to see how much it keeps going down. Because at the moment, like, if you look at foreign currency to USD to Bitcoin, back out all the way, the flow back to your wallet.
Yeah.
That can be like 3.5%.
By the time you've done your Forex
by the time you've done it all and you've got it in your wallet.
Can easily see that. Even on Sharesies, it's 1.9% in and out and then 0.5% exchange fees, right? So can add up pretty quickly, especially when that 1.9 on the other side is, if your stocks have appreciated in price, it's 1.9% of the new price.
Yes.
Might be 5, 6, 7% of your original entry point. So
yes, that's quite aggressive. That it can, but it compounds because you're not paying the management fees all the time, which is really nice. So you get to kind of do these math things and do the thing and do the change. So you worked overseas for how long?
2 years. So I did my university in Singapore for 4.
Yeah.
Worked for a family office for 2.
Yeah, let's go into that then, because I think that's illustrious. And I think I have a colleague that I work with that's in a family office, and you told me some interesting stories. So, it's seen as glamorous working in a family office, right?
Yep.
Seen as glamorous, would you say?
So when it's for the
maybe perceived as glamorous from the outside.
Yeah, into who you work for. So so that was my first job out of university. I worked for a family whose name was on the business school I studied at. So they had their name in a lot of pockets around Southeast Asia, not just in Singapore. Actually up in Hong Kong as well. They had quite a few operations. So it is luxury if you work for the right family office.
Right.
So there are some that I've heard of that, have private jets. They fly their investment team around Southeast Asia looking at private hospitals, things like that. So that element is something you don't get access to, working a corporate job usually. So if the one you work for shares that wealth, say you work for Zuru, billionaires, they have yachts, they have, the .com manor, maybe you get access to some of those things. So that would be the luxury side. Mine was a Southeast Asian billionaire. So little bit tighter. Yeah. So no, we didn't see any
So that,
boundaries.
but the outside world might go, oh, you work for that billionaire, you must be.
You have a nice office, but they're billionaires because they didn't have a lot of outflows.
Absolutely. And how's the working environment in that space? Because I've heard it's pretty intense.
Yeah. So, these people have amassed huge fortunes. So their 24/7 is how do I compound it? And especially when you work through a family, the first generation builds it. They've come from nothing to something. The second generation were born into that sort of grind of you need to work hard for what you get. You need to work, create a legacy, that kind of thing. Third generation has generally come in and, hold the fort. Hopefully you don't go down like the Rothschilds and so forth, where money is distributed over time so much that it...
And what generation were you working for?
Third. Yeah. So, they do live quite a glamorous life, you could say. Yeah.
Yeah. And was there any crossover for you between second or third? You weren't there long, so maybe not.
I mean, the chairman was the second generation. Yeah.
Interesting. And what was the dynamics like in terms of influence? Has it got to a point where the third generation was running the show, or?
In the family office, it was the third generation, but we were just one family office of many of that group. Yeah. So they have a lot of different pockets. Ours was focused on the food and beverage sector.
Oh, okay. Very cool. How would one want to break into that if they found that appealing? And what was the biggest benefits you got from that experience?
If you're wanting to break in, it's pretty hard. The usual route is to go into a bank or
investment bank and then build a relationship with the family.
Correct.
And then get poached, basically.
Yeah. So you might go into a bank, like an investment bank or something, then move into private equity and then eventually get pinched, or work for a consulting firm like Bain is quite big in the family office space.
Yeah.
So something like that could be a good trajectory to sort of get into a family office. In terms of my biggest takings, it's the way they sort of operate. It's very interesting. It's different from an investment house. You have one shareholder.
Yeah.
They work very, very long hours trying to find those opportunities to grow the wealth. But yeah, very long hours, 80 hours a week, easily.
And what sort of access, and now this is broad because they're billionaires.
Yep.
But in your experience, what would you say the obvious differences in access they have versus like an everyday individual that's investing, or maybe like a upper middle class person that's got some assets behind them, but maybe working a good job?
Yeah.
Just a normal, but well-to-do human versus billionaire.
So private opportunities, I think. Everybody has access to Tesla stock or Palantir, whatever it might be, which we did sort of dabble in the family office. It was more on the side. And the biggest thing was the private opportunities, the ones where we get an investment memorandum, a teaser before the IM. And that would just have a one-pager about the company. We can inquire for more information. And, you'd have these big ticket things that come across your desk. So we had some big targets in New Zealand that came across. What I realized at that point is New Zealand's always for sale. Just depends on the price. Once your company hits sort of 10, 20 million, it's time to go find an overseas buyer. Yeah.
Right.
So we saw a lot of that. The other thing is these side pockets to VCs as well. So a lot of these venture capital funds, they'll have their big fund, maybe the family office invests, but there was always the option to join in a side pocket. And you look down there, the order book, it would be banker at HSBC, banker at JP Morgan, whatever it might be. So a lot of those private opportunities come by either being an investment bank or a private office.
Yeah, right. Do you think there's actual edge? Do you think the returns there are strong?
No, I think it's all to play a little bit.
Yeah, that's kind of
if we look behind the scenes on some VC funds, and you'd have one big winner, you'd have a lot that are just sort of 1, 2, 3 times, what you put in, which essentially, if you can't IPO, just sort of fizzles out.
Yeah.
The long tail of just, we tried something, it failed.
Yeah.
So the IRR would be largely driven by the company that did really well.
Yeah.
But of that 40 odd companies, one is the superhero and the rare kind of stagnant, unless it gets a trade sale or something.
Quite interesting though, how much effort goes into private in the family office space.
Yeah.
But I'm assuming that like the majority of the returns are probably coming from their liquid asset base.
Yeah, I mean, we had a lot of dry powder for a while. So for us, the biggest earnings were interest. But we had some portfolio companies that did quite well as well. We owned a bakery in Singapore, quite a large one. We were doing a lot of expansion activities for it at the time. But they do spend a lot of time on private opportunities. To be honest, an ETF would probably do better, based index fund. And we did do some analysis on that at one point, but it's not so exciting. If you're rattling around these groups, you want to have a story to tell.
Yeah.
And if you're investing in ETF, something like what I do, there isn't much of an investing story to tell, you could say. It's just keep calm and carry on.
Yeah. You did talk a little bit about your thematic blend versus your NZX versus your S&P 500.
Yep.
Do you take much of a scientific approach with that in terms of like thinking about, I guess, a mix of currency exposure versus just, because, everyone talks about index investing, but obviously what is an index?
Yep.
And what type of index is it? So how do you feel of that kind of relationship between, I guess, being pegged to a reserve currency, well, not being pegged to a reserve currency, being beholden to a reserve currency, plus then obviously having buying power in somewhere where you live and you're saving for your retirement?
Yeah, so for me, it's keep it as simple as possible. An S&P 500 is the basis of my portfolio. And it just keeps things simple. You would peg to tech, which I'd be investing in by email and Google's anyway. So for me, it just covers those bases. And the S&P 500, the weighting is 45% tech.
Well, yeah, if you count some of the stuff that's not grouped in as tech as well, we're more in that kind of 52 to 55%.
Yeah.
Kind of allocation.
What isn't tech? Is everything has to have a tech base to it. So for me, keeping it as simple as possible is pretty important. Something that just dollar cost average.
Yeah, so dollar cost average heavy in the S&P 500, and then the rest is basically your preference away from that S&P 500 whole.
Like the core satellite type strategy, you have your 80% core,
right?
20% you could blame it, but it's that sort of a little bit of crypto, a little bit of this stock, that stock, a little bit of a play, heard this was doing well, that kind of thing.
Right, yeah. No, it's always...
It really comes down to the fact that I still have a full-time job that's very energy intensive. I run the YouTube channel, so my 9 to 5 is an asset. Where you're then 5 to 12 is YouTube. So yeah, for me, it's more about creating that passive asset base with YouTube that will do better for me over the coming years than necessarily a nest egg.
Well, yeah, that asset obviously now has a value. It has an annual earnings to it, so you put a multiple on it already.
Yeah,
and you probably have already done that a little bit, at least in just your head.
Not when you're not selling.
Yeah, hold the bag.
But yeah, it does hold extreme value.
Holds value, right?
Like it's something you can carry wherever you go. It's not tied to a location. I make content on Australia. Some people think I'm based in Australia. I make that much content for Australia.
Right.
And it's really about creating the asset, a bit like a mortgage broker does with their sort of book of business. I have a book of videos that create, revenue every day.
Yeah.
Some have sponsor posts, some have affiliate links, that kind of thing. So for me, that's the bigger priority than necessarily finding that Palantir stock before it blows up. For me, that wouldn't give me as much enjoyment as a video that crosses 10,000 views or something.
Right, yeah. Tell me a little bit about the art of making content and making it high quality, because I think there's definitely a difference between the content I create with this podcast, which is lightweight, low editing, conversational kind of style podcast, but you're actually coming in there with a punchy kind of episode theme. You're trying to kind of show off like a thesis or something that's interesting and topical. There's a lot of effort and research that goes into that before you've even shot. So kind of give us the lowdown on what does the creation of a video look like start to finish?
Yeah, so I guess the first thing is coming up with a video idea. Yeah. And the video idea can come from many places. It could be, I saw a news article, something that Ali Abdaal, a big YouTube creator, talks about is having a coal mine. And that might be a link to Bloomberg, CNBC, New Zealand Herald, interest.co.nz, whatever it might be. And it's a bunch of places you can go to find inspiration. Twitter or X is a big one as well. So what are people talking about on Reddit? These are the types of things you might look at. Other things that are trending on YouTube as well, that might have done well in the US. So I have a bunch of creators between sort of 3,000 subs or all the way up to multi-million. and things that they might talk about in the US. A recent one was financial statistics of the average Kiwi.
Right.
And I saw somebody did that in the States and did really well, talking about the breakdown of income, assets, debt, retirement accounts, that kind of thing. And I thought that's exactly on par with the channel.
Right.
So that's kind of where you'd go for ideas on video topics.
Yeah.
And that's sort of come out over the last year or so. Before that, it was mainly, this is something interesting to me. This is something I've done in my personal life, like buying a house. Oh, look, my rates went up 20%, let's make a video about all the costs and how much they've gone up, and, water key every year, electricity, broadband, and that kind of thing.
So how many ideas do you think you have on at any given time in terms of video ideas? Like you're kind of cooking away at?
Probably 10-ish.
Okay.
I've always got a pipeline. I've got my, iPhone notes. I've got Notion as well, where I capture ideas, email myself, that kind of thing. Yeah.
Do you find that when some of them that like you've got to move?
Yeah, absolutely. There's some that are timely. So something like the Reserve Bank with their depositor compensation scheme, it was coming out in July, so had to get that one up.
Make sure it was early.
Yep. Or I think I even went a month earlier than that.
Right.
So there's some like that. There's Trump tariffs. Jump on it. Every YouTuber.
Find they perform the best.
The timely ones sometimes.
Yeah.
I seem to have quite good luck on many of those around the dollar, falling.
Yeah.
OCR updates, some government announcement like budget. Yeah. They tend to do quite well. People are Googling for them, that kind of thing. So Google and YouTube are quite interlinked. So if people are searching on Google, they're probably searching on YouTube too.
Yeah. Right. And then what's the average kind of prep time? A week? 2 weeks? Couple of days?
It depends how quick it needs to be. You can whip out a video in an evening.
Yeah.
But then you have to make a compromise on the amount of time that the video might go for. It might be 8 minutes and 1 second as the sort of mid-roll ads timeline is. So you'll often see that 8 minutes and 1 second, where you just sort of have to sort of make it that time to put in mid-roll ads.
Right.
And then you have to compromise on the editing, things like that. So some of those timely videos can be a bit rushed.
Oh, yeah.
But if I had to sort of start a video from scratch, it would probably take, I don't know, maybe 3-4 hours to draft about 1,500, 2,000 words, thereabouts. That's usually the sweet spot.
Yeah.
And from there, you have to film, which can take an hour by the time you set up all your equipment, do your filming, make sure your microphone's turned on, all those little things, the lighting, the background lights, making sure it's all coordinated.
Totally.
And then the editing is where the time really gets, where you spend a lot of time. So, I mean, there's no been a point putting time on it, but generally about an hour per minute of finished product is probably out a good ballpark.
Yeah, cool.
Yeah.
Kind of fast forwarding maybe, I don't know, maybe 5 years, right? Like, what does success for you look like in 5 years?
I guess you can break it down into personal and professional. So for me, just growing the YouTube channel is fun at this point. Just seeing the subscribers go up, one by one, it's quite fun.
Yeah.
Just to be growing something. I think that's what many people miss, is building something. Maybe their job is a bit stagnant, something like that. You need to be building something in life, and some people might see that in their children. Some people might see that in their careers.
Yeah.
For me, YouTube at this point is a really big one for me, and career, of course.
So I was just thinking, so when you said, so you do firmly feel like the YouTube is personal.
Yep.
And then professionally, you've got your own roadmap.
Yep.
With where you want to go.
Yeah. Yeah. So professionally, growing in my career, I've just had a promotion, so doing quite well in that space.
Yeah.
And YouTube, I mean, it allows you to connect with people like yourself, people in the industry doing different things. So it is complementary to my job, where I just know more people in the industry, people doing different things. None of that can be a bad thing.
Yeah, nice. Yeah. Oh, that's cool. That's awesome. Well, thank you so much for coming on the pod. I really appreciate it. I feel like I barely scratched the surface in this episode.
Yeah.
What do you think the rest of the year will be? What do you think you're going to spend the rest of the year on in terms of content? Do you already see like a theme coming into it? Is it going to be more interest rate stuff? And if so, can you kind of adjust it so that people that aren't so interested in interest rates?
Yeah, I mean, with interest rates, we'll probably see them. The trajectory that's
Seems in there obviously going down.
yeah. Now I think that's expected for tomorrow as well. The 0.25 that they're sort of talking about. So
25 bits isn't too bad. The good thing is they can fast follow the US when the US eventually does it.
Yeah.
But they can't go too far ahead of the US. Otherwise, it creates other complications.
yeah, so I don't see interest rates being a big thing for the rest of the year. It doesn't really have a housing angle.
No,
The housing market I don't see recovering in a hurry. A lot of New Zealanders are still migrating out, so that's always a hot topic around Australia for other options. How's the UK doing?
right.
So things like that are interesting. But I'm doing quite well at the moment with broad-based topics. So yeah, we'll see what does well. Generally, it's I think Gary Vaynerchuk says something like what was it? Jab, something like that's the one. Yeah. So when you have topics that do well, just keep doing them. So whatever the audience enjoys is what I'll continue doing.
Yeah, listen to the customer.
Yep, that's the one.
Nice, awesome. Well, thank you so much.
Thank you for having me.
Appreciate it. Cheers.